Perfect. All right. So today we're gonna go kind of into some of the details of something you might have been seeing in the news. There is a rather large tax package that has worked its way through the House, and is currently sitting in the Senate. That is sort of being framed as a tit for tat trade on extensions of corporate tax cuts from the Tax Cuts and Jobs Act, in exchange for an expansion of the child tax credit. It is a fairly uneven trade, as we will get into the details of tonight. So, first, just a quick overview into like why this is happening right now. In 2017, the Republicans wanted to make their tax bill look a lot cheaper than it actually was. That's the Tax Cuts and Jobs Act, or the TCJA, which I'll probably mainly be calling it from here on out. So to get a lower score from the Congressional Budget Office, they made many of the provisions expire earlier than other provisions, right? So a lot of the personal tax pieces are going to be expiring in 2025. The corporate provisions, most of them started expiring in 2022, 2023. It was always and vocally their intention to keep extending these provisions in perpetuity. They just did not want to get a large cost number on their bill while they were claiming to be deficit hawks. So there are three main corporate tax extenders that are a part of this package. The first is the research and development tax credit. There's a net interest tax deduction and what is called 100% bonus depreciation. We'll get into each of these now. So the R&D tax deduction allowed the TCJA allowed corporations to deduct all of their research and development costs from their tax bill the year they were incurred. This was a bit of a change from how it worked prior, and in 2022, it reverted back to how it worked before, which basically said companies had to amortize these expenses over 5 years. What this basically says is you had to spread the deduction out over the span of 5 years, which was also supposed to kind of reflect what the benefit of that R&D to your company would be as you went forward. There are a lot of problems with the R&D tax credit, beyond just the immediate expensing, including really broad definitions of what can count as R&D. You hear a lot about, say, pharmaceutical companies shoving huge portions of their marketing budget into their R&D expensing, but that is a broader problem. Right now, the big thing to worry about is this immediate expensing. Not only did kind of Republicans demand a return to these immediate write-offs, they also insisted that the rule be retroactive for any expenses that happened in between 2022 when this expired and now. This is supposed to be an incentive for companies to do important research and development work in the US. Kind of hard to justify an incentive tax credit on money that's already been spent, but they're doing it anyway. Net interest tax deduction. This allows corporations to basically be able to deduct interest they pay on loans from their total tax bill. So this is a favorite tool of private equity companies, especially who, if anybody's familiar with what happens, say at Toys R Us, right? Pretty profitable company, sustained business model, taken over by private equity, overloaded with debt, sold for parts. While they were overloading it with debt, they were able to deduct massive sums of money from their tax bill, thanks to this net interest tax deduction. This is limited to 30% of total income, but the Tax Cuts and Jobs Act dramatically expanded what that definition of income was that could be expensed. In 2022, that kind of re-narrowed. Republicans are insisting on kind of restoring the old definitions and again making it retroactive. This is a pretty big depravity. If people just want to be careful, make sure they're muted, that would be excellent. Um, Great. And then 100% bonus depreciation. This is an expansion of a tax benefit called accelerated depreciation. It basically says if you buy a truck, say, you can start deducting the cost of that asset faster than those assets actually wear out. So theoretically, yes, your truck loses value every year you're using it. You're supposed to deduct, or in a sane world, you would be deducting those expenses as it lost value. Instead, it allows you to just deduct the full amount up front. What this TCJA did was basically said, yeah, you could deduct the entire amount up front. Excuse me. Before that, you could do it faster than they were wearing out, but it had to be spread out over 5 or 10 years, depending on the size of the asset. Um, a lot of companies like Amazon, Verizon, General Motors, excuse me, anybody that has to buy a lot of equipment uses this tax benefit heavily. This is how they have been able to pay like single digit tax rates a lot of years. Um, it very heavily subsidizes automation because it makes it more practical to replace human labor with machines, even when there's not an actual economic benefit to doing that beyond this tax cut. And then once again, the Republicans are demanding that this be retroactive, so that everything that's happened between 2022 and now is wiped out. So, in exchange for all of this, Democrats basically got an expansion of the child tax credit. The child tax credit, I think, came to a lot of people's consciousness during the American Rescue Plan at the height of COVID. This was sort of the vehicle that they used to directly impact a lot of working families. It is kind of what famously allowed them to claim for a couple of years they had reduced childhood poverty by about 50%. It was a 2-year expansion that ran out. This is not that expansion. This is a significantly less generous expansion. Um, it makes larger portions of the tax credit refundable. It is particularly helpful to people in the $20,000 to $40,000 range. Um, it allows them to claim a larger portion of the credit if they have multiple children. It still leaves out the poorest families. So if your family has little or no income, you basically don't get this benefit at all. Um, and is generally just a much smaller expansion than the 2021 American Rescue Plan. So that is what the Democrats have gotten in exchange for all of these wish list items for the corporate tax cuts. The concerns we have about this are a few. One, the corporate tax cuts in general are pretty bad. Secondly, 2025, these corporate tax cuts extensions are going to run out again. And then a large portion of the rest of the Tax Cuts and Jobs Act is going to run out again. This should be an opportunity to essentially restructure the tax code to be something, much better than what we had pre 2017, much less make sure we're not renewing the worst parts of the Tax Cuts and Jobs Act. What this has demonstrated is that the Democrats can be bribed away from that in incredibly cheap fashion, which is raising a lot of concerns. So we are trying to make a lot of noise in the Senate. We have some great allies in the Senate. Senator Warren has been making a lot of noise about this. Senator Whitehouse has also been publicly disparaging of this. And how generous this deal is to corporations versus working families and children. So we have a few asks of you. This is a purely Senate ask. So we're asking all of you to call your senators and make a few demands. One is to demand a markup in Senate Finance to be able to amend the legislation. At the moment, the chair of the Senate Finance Committee is very uninterested in holding a markup. He does not want to give the opportunity for these senators to change the bill. This is sort of the first opportunity people would be able to make substantial changes to this, including making it significantly less generous on the corporate tax cut side. They should be refusing to make the corporate tax cuts retroactive. These are all supposed to be incentive tax cuts. There's no reason to be incentivizing money that has already been spent. And three, they should all publicly state that they will not support a further extension of corporate tax cuts in 2025. This needs to be a firm line for Democrats. If they're able to make this less generous and pass this deal, they need to make it very clear that this is not a pattern they plan to follow again, especially if they're holding a lot of power come 2025. So those are the big three asks. We'll be sure to kind of put that all together in talking points and follow-up materials for y'all as well. But happy to take any questions now. I'm gonna stop the share. See everybody's face again.
I think we had a few in the chat. Fred asked what the cost of each of these packages is.
That is a very complicated question, and it really depends on who you ask. Joint Committee on Taxation and CBO came up with very different numbers. Joint Committee on Taxation thinks that the corporate side is about 5 times as big as the child tax credit. And I think it was 600 billion was the top line number, if I remember correctly, over the next few years.
And the next question was before the child tax credit was monthly checks and now it's not, right?
Yeah, that is a little bit unclear how they're planning on distributing the child tax credit. The monthly checks were a change from how they had done things in the past. I believe it is more akin to a traditional tax credit where it's something you're just able to claim at the end of the year, which, by the way, is a big reason this version leaves out a lot of the poorest families, because if you're not paying income tax because you don't make enough money to pay income tax, you are not qualifying for this tax credit.
Okay, and then do we know what the financial impact in 2023 was for these three?
I do not know what the cost was for the three. They were not in effect in 2023. I don't know what that did for revenue. I don't know if that has been added up, but I can look into that, and if I can find an answer, I'll put it in the follow-up materials. All right, I'm reading this question from Murray real quick. Yeah, I would say this is a fairly common talking point regarding business tax credits. Republicans very much like to do magical math in which tax credits pay for themselves, especially corporate tax credits, because they're just innovating the economy. And historically, what these tax credits have obviously done is freed up more revenue for shareholder dividends and tax stock buybacks has been the main thing. They spend corporate tax cut money on, very rarely on something like job creation. And in the case of the bonus depreciation, actually, as I mentioned, encourages decreasing labor in favor of automation. Fred, I'm gonna have to get back to you on the total budgetary cost. Again, like I think we need to worry less about total numbers and more about just the impact of telling corporations they have, free reign to get the tax credits they want at a fairly cheap price.
It's definitely not 720 billion a year, regardless, though. That was over the life of the.
Yeah. And yeah, currently these extensions are at 2025, which means we're now setting up 2025 to be a fight over the corporate extensions as well as the individual tax pieces. The other problem is the CTC actually goes till 2026, which means that bargaining chip goes away as part of the fight as well. So that's not excellent just from a strategic perspective. Jim, I agree. It's time to pass the Oligarch Act. Couldn't have said it better myself. Um, all right. Do we have any other questions from people? I don't know if we have any. Adam?
I have a question. So this bill came over from the Senate, right? Did the Senate Finance Committee vote on it and the Senate vote on it and it went to the House and then the House approved it 40-3 and the House and now it's going back? Tell me the legislative process here.
It was a deal that was banged out between the Senate Finance Committee staff and the House Ways and Means staff. Senate Finance is controlled by Democrats at the moment. House Ways and Means is controlled by Republicans. It has passed in the House, which has sent it to the Senate. It is sitting in committee with the Senate right now. There is some debate over whether or not they're going to do what's called like a markup, which is essentially the committee goes through the bill and people get to recommend changes and then the committee votes on changes and they decide if they're going to amend the legislation or not. They don't have to do that. They will sometimes skip it on big packages like this if they want to smooth the process out. The Senate Finance Chairman, who obviously negotiated the bill, wants to smooth the process out. A lot of members of the Senate Finance Committee want the opportunity to make changes. And I will say Republicans too have some concerns, mostly trying to further shrink the child tax credit. But there's a very odd coalitions forming around this legislation. Yes, you would be surprised, Ira, at how not far off you are. I've seen people vote on legislation that's literally got like red pen written all over it for amendments. They have not had time to go type it up. Okay.
I know there was a question, R&D is such an inclusive term. Do you know of any idea how much is R and how much is D?
Yeah, that is a problem and that there's very little public transparency on what kind of qualifies as R&D credits, and unless the IRS checks the work of these companies, there's a little bit of your like taking their word for it. The definitions of what can go under it are fairly broad. That's a pretty big problem with R&D tax credit. I think it's also part of the reason like the tax credit is so popular is that it's a great name. It's an idea that like a lot of people think makes sense. And I think at its base, if narrowly tailored, does make some sense, because if you are trying to actually develop something new that might not work, you're taking a substantial financial risk there. But what this tends to go to is things like marketing budgets or slightly reworking a patent of a product that already exists in order to extend your ownership of it, things like that. Less of the positive impact we tend to think about when we think R&D.
And then Grassley has said he won't vote for it because the passage would help Joe Biden. Is he right about that assumption?
I think that the child tax credit expansion is something they will definitely run on as a victory. I think that people's perception of what the child tax credit is was extremely changed by American Rescue Plan. I think the vast majority of voters will not see this as a they'll hear child tax credit and they'll think that's what it is, basically. And so I think possibly it is helpful to him. And I think that is part of why a lot of Republican senators are grousing about it. I think the question is like, at what cost is that one helpful benefit coming? And where is it going to set us up for in the near future?
Yeah, do we have any thoughts on, like, you know, one thing that Murray put in there was the concern that people hear things like cuts and relief and you know, they don't realize that maybe there's like a short-term gain, but the long term it can be really harmful. Is there any, like, how do we message? Because really you're up against the messaging of like the child tax care credit, and I mean, people are like, that was fabulous, that helped a ton of people, we cut so much child poverty, but then what we're actually passing isn't that. So is there ways to approach that topic with people or have that conversation that you've seen work to kind of help explain or things like that?
I'm going to say that like I am not, and the patriotic millionaires are not against an expansion of the child tax credit. I'm going to start with that. That is a very positive tax credit. I think the bigger the better when it comes to the CTC. I think the question comes in where we try to focus our messaging is, you know, there are people, there is a party, frankly, that is more interested, right, in passing massive tax cuts for corporations than they are in providing some form of tax relief for working families. And they are willing to hold those working families hostage in order to get massive tax benefits for these wealthy corporations in order to ensure Amazon can pay, you know, between 0 and 5% tax rates year over year because they keep buying more trucks and factory machines, right? I think that that is the thing we need to message hard on. I think that is the thing we need to focus the messaging on. I don't think we get anywhere railing against the CTC, and I also just think as a practical matter we shouldn't, right? The effort to expand the CTC was and is a pretty noble one. I think a lot of people involved in it got a bit locked in on the goal and gave away the farm a little bit in exchange. And that's what we need to try to claw back a bit.
Anybody else has questions, you can drop them in the chat or feel free to come off mute and we can chat as well.
I'd just like to chime in with what I was saying. I guess, and I said this before, that's my big concern is people just understand the bottom line. You know, how does this help the people it's supposed to help? But what's actually going on in the background here that probably is not going to help you and just further help somebody else out there that's going to take advantage of you. Because I blasted Fishbach back and said, you know, people get more for less, and we know who you support. So, you know, I think just simple messaging so people, just the average person understands, you know, child tax credit, great, that's a good thing, yes. But, you know, what else is there that they aren't telling you? What's behind the curtain? You know, those kind of things. So the message is really important, I think.
Yeah, I would agree. And I think that is part of kind of how we view our role. I think right now, because they worked out this deal, the Democrats don't want to make a lot of noise about how bad these corporate tax pieces are. And somebody needs to. And so I think that that's kind of how we view our role, is making sure that while people can be happy about the CTC expansion, they sort of know what the cost was of it and how that happened, and ensure that kind of going forward we don't continue to just like give away these massive expansions of the corporate tax credits.
And also, I just wanted to put it out there, and I'll drop the email, but gep@patrioticmillionaires.org. If you have an issue that you want covered, that we haven't covered or you're interested in, please email us. We're happy to bring in an expert and have them talk about it. Or, you know, if we have an expert on staff, bring them in to chat about it. But I know there's a lot going on, and we're going to have some really cool folks over the next year come chat with us. But if you have an issue that, you know, you want clarification on, or you want to hear an expert talk about, please let us know. I will drop the email in the chat now. We'll be screening that. But yeah, just thought I'd put it out there to this amazing group.
Great. Um, anything else, or are we all set?
Just putting it in the chat one last time, in the email where you registered, you should have gotten from us. There's a form and I linked it here. You can fill this out and then you'll be shipped a free copy of our Tax the Rich book. It's got a lot of info in there. It was in some of our early training as well for American or the Great Economy Project Online. But you get a free copy. So it's very exciting. So just give that a quick fill out and then we'll have that out in the next 1 to 2 weeks. And yeah, very excited for that. As always, we do a recap email. We're going to have links with languages. We'll have a copy of this recording. And you can feel free to reach out and email. Yeah, and we're happy to work on the messaging, Marie. That sounds great. So yeah, we're just thrilled you're all here. Any last questions? Always.